Hello, greetings to everyone. Welcome back to Rackle Media. Today we are going to talk about product costing methods, which will include job costing, batch costing, contract costing, and the likes. So we are going to focus on specific order costing and continuous operation costing. When we talk about specific order costing, it is more or less like accumulating the cost of a specific order. So what this means is that let's say you'll be giving someone will place an order for you to do a particular job for him or her. Let's say you are a seamstress or a tailor, and someone comes to you and then the person tells you to sew a particular dress for him or her. That is more or less like a specific order. Person has given you that thing, that order for you to create a particular shirt for him or her. When we talk about continuous are more like used in industries. The industries that produces in a continuous process. So for example, if um if I don't want to create a milk or want to do his idle milk, what they do is first they extract the milk, they process it before they will now evaporate it, before they will put it in a can. So it follows a continuous process or a continuous operation. So we are going to look at this here. And we will also talk about contract costing, but our TA told us that contract costing wouldn't come in the exam. Maybe if it will come, the reading aspect, that's what will come. So I wouldn't really talk much about the calculation aspect. So we are going to cover job costing, batch costing, and contract costing in this session. So our learning objective is that we should be able to explain product costing methods, the need for an appropriate product costing method, and the various product costing methods. Then we should also be able to explain the nature of various specific order costing methods, which includes job order costing, batch order costing, and contract costing. We should also be able to explain how costs are recorded on jobs, batches, and contracts. And we should also be able to pass journal entries for cash flow in jobs, batches, and in contracts. So at the end, we should also be able to determine the profit made on jobs, badges, and contracts via the costing system available to each market. So these are some reading lists. You can take them on yourself. So introduction, regardless of the type of company involved, costs are associated with the product and services produced and sold. So now, how do we determine the cost of a product? So determining it depends on the organization's production process, right? So product and service costing is very important. So it can either be externally, that is when we want to value inventory of products and to determine the gross profit on sales, or internally when we want to make pricing decisions and budgeting for expected cash flows. So costing methods, what are they? So in the layman terms, costing methods are methods that are used to accumulate costs that is attributed to a particular job, a particular batch, a particular costing, a contract cost, or a particular contract, sorry. So basically the process that we use to accumulate costs is what we tend to as the costing methods. So the procedure used to accumulate costs, track and assign costs to a final product or service. So the process of assigning costs to the product or services provided provided by an organization. So now let's look at the categories of costing methods. So different products are provided differently, hence different methods of accumulating and allocating cost of resources used when products are being manufactured. Every organization will have a product costing method with unique features depending on the firm's production process. Whatever costing method is employed, the basic costing principles relating to analysis, allocation, and apportionment will be used, right? So what we have been doing already since the beginning of the session or the beginning of our recordings up to now, we are going to apply all in this session. Specific order costing methods and continuous operation method, right? So specific order costing method. So as I explained earlier, the specific order costing method is accumulating for cost that is attributed to what? Job, batch, or contract cost, or contract, sorry. So the basic cost accounting method applicable where work consists of separately identifiable contracts, jobs, or batches. So it is used where products are produced in distinct batches and with each batch significantly different from the other batches. So this method is usually used in the construction industry, specific order printing, shipbuilding. So the main variations are job costing, batch costing, and contract costing. Then let's talk about continuous operation method. So this method is used where standardized and homogeneous products are produced from a sequence of repetitive and continuous operation. So I use ideal work as an example here, right? So costs are averaged over the units produced during the period, being initially charged to the operations or process. So let's talk about the categories of costing methods. So costing methods, we have the specific order where we know it is the job, the batch, and then the contract, where the continuous is either the process costing or the service costing or operating costing. So the process costing talks about or deals with either byproducts or joint products. So let's pick them one by one. Now let's talk about job costing. So job costing is a specific order costing in which costs are attributed to an individual job, right? So it is used where job is done towards a customer's special requirement or specification. Someone tells you to sew a shirt for him. He or him, he is going to bring you the kind of designs he likes, the kind of clothes he likes, and the like. So you are doing it to this special requirement. If you are told to sew, let's say you are a seamstress or a tailor, and you are told to sew, let's say, a wedding gown for someone, you are going to sew it on how he or she likes it, right? So this and batch doesn't really have a difference. The difference between job and batch is that for batch, the job is being done in plenty form, like many, like plenty, and then it has things for badges. So we'll talk about that soon. So cost is accumulated by the job, and cost is determined for each job completed. Each order is termed a job, and it is given an identification to differentiate it from others. So these are the procedures for job order costing. So you receive an inquiry, you estimate the cost, then you receive the order, prepare production and job order, you record the cost. Now you determine profit from the cost, the job, sorry. So after getting everything as a cost, you put a margin on it or a markup on it for you to do what? Get your profit. So preparation of estimated job cost or quoted price. So we look at whenever we are preparing our job costing, we look at the prime cost, which is the summation of all direct costs, which is direct material, direct labor, and then direct expenses. Then plus production overhead, which consists of all indirect costs, indirect material, indirect labor, indirect expenses, plus non-production overheads, which can be either selling and distribution, administrative overheads and stuff. Then you are going to what? Add your profit to it. Sometimes at our level, we are not going to do this, but sometimes we are supposed to what? Add tax to it, your estimated tax to it, so that your profit will be tax free. Right? So it is used to respond to customers or clients' inquiry for tender. It's used to compare its actual cost of job when completed. Job order costing method, right? So here we talk, we also move towards accumulating gathering of actual costs to be assigned to completed job. So what we are going to do here is we capture all information from source documents. Information is required on all cost elements that go into production. So making entries via journalizing. So where we are posting entries into ledgers, right? What we are going to do, so let's talk about the subsidiary ledger. It contains detailed entries of cost elements relating to the job. It records all details for materials used, labor hours spent, and also overhead applied or incurred. It also deals with documenting documents that are used in job card, like it deals with a document that is called a job card or job cost sheet. It also talks about the aggregate sum of all job cards that will be transferred to the control account in the main ledger. So this is how the job cost sheet looks like. The job number here, the date here, the department here, then the item here, let's say school uniform. Then now your materials you are going to use, overhead, whatever, total cost, you get your unit cost. Then you add your profits later on. So now let's move on to the main ledger. The main ledger contains control accounts which record in total the detailed individual entries made in the subsidiary ledger. Generalizing the entries from the flow of production, main control, sorry, main control accounts are material stores control account, wages control account, production overhead control account, work in progress control account, finished goods control account, cost of sales control account, and also non-production overhead control account. So if you want to generalize everything or post them into the ledger, what we have to do is that in the presence of raw material, where we purchase raw material, what we are going to do is we are going to debit the materials or stores control account and credit cash if only we paid with cash, and credit trade payables if only we paid what on like we bought it on credit. Then if materials has been or is being issued to production, what we have to do is we have to debit work in progress into bracket direct material used, and also debit production overhead control account into bracket indirect material, and also credit material stores account. Then when a labor is utilized for production, we debit work in progress accounts with the direct labor Then we debit production overhead accounts with indirect labor. Then we credit cash or wages payable accounts. Expenses incurred during production. So we debit work in progress account with the direct expenses incurred. Then we debit production overhead control account with the indirect expenses incurred. And also we credit cash if only we pay the expenses with cash, or if it is an accrued expenses, we debit and we credit payables. In the case of production overhead absorbed, we debit work in progress account, we credit production overhead account, then we close off production overhead control account to under or over absorb overhead control account. When there's a finished good, we debit finished goods account and we credit work in progress account. Cost of goods sold, we debit cost of sales and then we credit finished goods account. Non-production overhead incurred. We debit non-production overhead account to credit cash or payables account. Where it is absorbed, we debit cost of sales account and then we credit non-production overhead account. Then we close off non-production overhead control account over or under absorbed overhead. Now, anytime we make any sales, we debit cash. That is if the sales is on cash, or if it is on credit, we debit trade receivables. Then we credit sales. So determination of profit or loss, we close off the sales and the cost account and the over or under absorbed overhead account to the income statement. So that is it of that is it for job costing, right? Batch costing, as I said earlier, is similar to job costing, where now you see job costing is only one item, but batch is plenty, right? So it is similar to job costing in that each batch of a similar article is separately identified. So cost per unit of batch costing is determined as follows by dividing the total cost of the batch by the number of units produced in a batch. So if let's say your total cost in a for producing a batch is like 50,000, then the number of batches in the or number of items in a batch is like 5,000. Then the cost per unit is what 10 if Ghana cedis so Ghana cedis. So this costing method is common in the footwear, clothing, and printing industry, right? So where let's say a footwear clothing industry receive a contract from let's say a school, right, to produce like particular number of items of the same size, the same quantity, the same quality and stuff. Then that's when they apply the batch costing method. So it's the same thing as the other one. So we move on to the contract costing. The contract costing told us that it's likely that the reading aspect is going to be shown the essence. So let's take note of this. So contract costing involves like it is similar to job costing, but here is the case: the work takes a longer period, right? So it can be constructing bridges and the likes, right? So it's just like job posting, but takes a longer period. So it's a site-based constructed away from the enterprise. Then it is undertaken to customer special requirements. If government give you a contract to create a bridge for a particular group of people, the government is going to tell you how you should do the bridge. That's why it is to the government special requirement. It takes a relatively long period to complete. So mostly of the construction, mostly of the constructional nature. For example, buildings, ship, aircraft, stadium, flyovers, roads, etc. So characteristics of contract costing. It has high proportion of direct cost. So most of the materials are ordered and purchased specifically for the job. So whatever you are going to use for creating a bridge is what you need to use for the bridge making. So any material drawn from the store are direct. Nearly all labor costs are direct, even though it is a type of labor generally considered as indirect. Night workers, site clerk, and the like. So all labor costs are direct when it comes to contract work. The most expenses are direct because of the self-contained nature of most site operations. So nearly all overheads are head office costs. For example, directors' salaries, and etc. Contract plans and location. If plans lease for the job, the leasing charges directly to the contract. If plant is purchased, a depreciation charge is made using the rate of depreciation periodically. The cost of the plant is first charged to the job. The plant is valued at the end of the accounting period and is credited to the job. Difference is what is charged to the job. So we have intermediate or periodic valuation. So we have architect certificate. So this is a certificate that is being issued by an architect after inspecting the work that is done. After building the bridge, the architect will come and then check whether everything is okay. Then the architect will issue what a certificate to you. It details the work satisfactorily completed and shows its value at contract price. So very soon we'll talk about contract price. Then we also talk about retention money. So these are basically money that are withheld for any future constructional defect. So if you give someone load for the no, if the government instructs someone to build a footbridge, the government is going to pay like 80% of everything, but will retain like 20%. That 20% might be paid after, let's say, the warranty of that particular job has expired, right? So with that one, the government can pay it. But if it hasn't and this will start to do neke, then the government can use that money to fix something. So they are only paid after all defect has been rectified or the warranty period is expired. So profit taken on contract, use the prudence concept. So not all profit earned on the contract to the period and date are taken to the income statement of the period. If contract is uncompleted, a portion is reserved for unseen circumstances. As I explained, contract costing account. So contract account, the account that will determine the cost of the contract and the profits made on the contract to date. It consists of the cost section, the profit section, and also the future section. The contractee's account, the personal account of the client. So the current cost section. So what we are going to do is we are going to record and accumulate all costs to relating to the job or contract. We determine the cost of work to date that should be included in the cost of sales for the purpose of calculating profit taken up for the period. It is made up of cost of work certified and also cost of uncertified. So basically, what we are trying to say is that Cost of work certified is equal to cost of goods sold. And cost of work certified can also be equal to work in progress. So we move on to profit section. So the profit section is more of determining of profit that is supposed to be shown at the profit or loss account on each completed contract. Future section contains items carried down from the previous section to the current account. So if there was any drawdown, any carry down, you come and then bring it as well drawdown. It contains unexpired costs, unexpired revenue, and written down balances such as cost of work, not certified, accruals and prepayments, etc. Determination of profit on contract. If we want to determine profit on contract, what we have to do is what we subtract the contract price from the contract cost, right? So the price that was given to them and then the actual cost we incurred when building the bridge. So work contract cost is what equal to the work cost of work done to date plus estimated cost of work to complete. So what we've done so far plus what we are expecting to do. If it's a contract loss, the whole amount is written off to the income statement of the period immediately. If it is a contract profit, determine the profit on contract to date for the period end, where surplus is equal to value of work certified to date minus cost of work to date. So if you want to get surplus, this is what the value of work that has been certified to date and the cost of work. So if they certified the work and then it was 50, and the cost that was used to achieve that 50 is 40, you have a surplus of 10. That's what it means in here. A portion of the profit is taken to the income statement based on the degree of work completed. So degree of work completed, this is determined as follows, where we say it is cost of work to date over contract cost times 100. Right. So where the degree of completion is less than 35%, then we shouldn't recognize any profit. Between 35 and 85% profit has to be what's recognized. So the formula we use is 2/3 times surplus times proportion of cash received over value of work certified. So the rest of the profit is called profit sustenance. Greater than 85%, all profit should be recognized. So this is an example of a contract costing account where all expenses are debited, wages, materials, accrued wages, expenses, depreciation, and if in case we purchase any plant, is being debited. Then now materials that was what's used but didn't finish, the closing stock is what's credited. The materials that has been returned is also what's credited. An expense that has been overpaid is credited. Then the value of the plant at the end of the period is also what's credited. Then now we also come in for the cost of work today. We have cost of work certified and cost of work uncertified. Uncertified, right? Then we have cost of work certified here again. Then your surplus that has been taken, surplus in suspense and the like. So this is basically not examinable, so I don't really want to talk more about it. Then now let's talk about the contractees account. So all carry down entries in the current sections brought down to the future sections appear in the statement of financial position. A work in progress account is also presented in the statement of financial position. All carried down items used in the determination of work in progress will not appear in the statement of financial position. So this is how the work in progress is computed. Cost of work done is equal to cost of work certified plus cost of work not certified. Then we get our profit taking. Then we less cash received. So the profits we are supposed to get, then we less the actual cash we receive. Then the difference become our work in progress. So work in progress in contract costing. This is basically its method two. Cost of work not certified. We add balance to contractees account. With less surplus in suspense. Then our difference becomes what our work in progress. So in this section, we have explained the various product costing methods, which is the job, the batch, and the contract costing. And we've also spoken about the various specific order costing method and how to apply them. And we've also talked about how costs are recorded on jobs, batch, and contracts, and how we will pass journal entries for cost flow in jobs and in jobs, batches, and contracts. We've also spoken about the profits made on jobs, badges, and contracts via costing system available to each method. So this is where we end our class for today. Mind you, I'll solve a question on this topic because this slide doesn't really have any calculation, but the other slides were having calculations, and I tried solving some of them, but this one is not having any calculation here. So I'll bring a question and I solve, then we move on. Thank you for your time. Kindly like this video and also subscribe to my channel. Bye. See you some other time.